You're watching BetterTV.com.
That a lot of people are trying to get back into the stock market. They're just kind of leery about it because they just don't know exactly what to do. So the first thing that you say is we really have to understand our own risk level. Right?
Absolutely. I mean, if one thing this market has taught us is that the market goes down. Yeah. We now know that with assurance, but it also goes up. But it doesn't always go up. It goes up and down every day. So pretty soon, after a while, you're getting the picture that, staying in for the long haul does make sense because the market will come back.
But in order to have a comfortable feeling with that, do you have to understand exactly where your money is and get a clear snapshot of exactly what's going on in your world first?
This is a perfect time because our attention is squarely on investing right now. So you want to look at what you already have. Look at your 401k that you take probably for granted a little bit every single day.
Right.
You want to know where that money is being invested, and of course you want to understand your own risk profile. How did you feel when the market dropped 40% and it was on the headlines every single day? Did you feel like you wanted to get back in and start buying because you were buying low, or were you scared?
Hesitant, right. Scared.
Exactly. That tells you a lot.
Okay, now you also say that people should look at their situation and figure out if it's time to rebalance or to create a different situation going on. What do you mean by that?
You know, we always hear you're going to buy for the long term and you're never going to peak. You're never going to look at it. Right. That is not smart. It doesn't mean you're going to readjust and buy and sell and buy and sell. But you do have to look at your portfolio.
Okay. And asset allocation is one of the big things.
The two things that will determine how much money you have when it's time to retire are asset allocation and diversification. All it means is how you're spreading your money and dividing it between real estate, stocks, bonds, and cash.
Okay.
There aren't that many choices of categories of where to invest, but how you divide your money is key.
Very important. Okay, and long-term investing, what are your suggestions for that? Because there are risks involved with that, of course, too.
Absolutely, and that's where the rebalancing comes back in, because that's where you want to stop and you want to look, and you don't necessarily want to take action, but you want to tweak. Think of it just as tweaking your portfolio to make sure that you are diversified and you don't have too much money in your own company stock in your 401k, for example.
Right.
You do want to take a look once a year at least and maybe think about tweaking.
Okay.
And adding and continue to add automatically.
So people should not be afraid to kind of tweak it and add, like you said, diversify your stocks, not just sticking with what you feel safe with necessarily, because we saw that didn't work too well.
Exactly. You can learn the basics about investing in stocks very, very easily. And once you get comfortable with that and you're confident and you understand that market is going to go up and down every single day forever, you take advantage of long-term investing by investing small amounts of money over long periods of time. And that's what your 401k is doing for you automatically.
Right.
And it's helping you. And so now is the best time to pay attention to how that money is divided and where it's going and how much risk you're comfortable taking.
You make everybody feel so comfortable, putting us at ease, understanding this.
This has been BetterTV.com. For more stories like the one you just saw, catch the weekday television program Better, your source for styles, trends, relationships, beauty, fitness, and other stories that will help make your day better. Check local TV listings to see if Better airs in your city. Thanks for watching.